Hey there, my name's Dave Freitag, and I am the Wall Street Cowboy. Thanks for stopping by. Today, we're going to talk about week 35, Bulls and Bears. We're going to talk about last week and see how we did with our selections. So sit back, enjoy the ride, and if you like what you see, make sure you hit that subscribe button, come back often, and tell your friends. So let's get to it. All right, so last week we had tech leading the way with consumer discretionary stocks and communication stocks, all leading ahead of the S&P 500. This week we have the same cast of characters. We have tech, communications, and consumer discretionary, with industrials also in the top spot for the last 30 days. And they tended to be in the top half also. The ones that were leading us downward or that were showing the greatest weakness would be energy. Telecom continued to drop. We talked about that last week, losing a little bit of its momentum. And utility. So it turns out to be a risk on week as we're putting on tech and communication stocks, and we're getting out of energy and utility stocks. Taking a look at this on a more granular view, these are the performance of the different sectors over the last month, and I've kind of sorted these by their performance. So this top one, this green line here, would be the XLK. The next one would be the communications, and then we have consumer discretionary with industrials down in here. And then this blue line here would be the S&P 500 as measured by the SPY. So you can see that over the last couple of weeks, these same cast of characters have been leading the market higher, and they continue to show strength. The ones that are really lagging would be energy, telecom, and utilities. So these are the ones down here. So this gives you a little bit better view over the last couple of weeks, the ones that are surging, the ones that are pretty pedestrian, the ones here in the middle, basic materials and the financials and staples, they tend to be in the middle, but for the most part, they're up for the last couple of weeks. So that positive drift to the upside continues to work in their favor. But the more traditional stocks that you would go to when you're concerned about a market top seem to be out of favor, and we seem to be moving in a direction that would indicate that it's risk on. So let's take a look at our bulls and bears from last week and see how they did. All right, last week we had Apple, AMD, Best Buy, as well as Nike and Monster Beverages in the top 20. They are alphabetically listed. Now, right here, if they're in a green background, then that just simply means that they were up during the week. And if they're in a red fill there, then they were down for the week. So the vast majority of our bulls did have an up week. And if they're in green over here, then they did in fact hit our target or exceeded our target. And if we have a number over here, that shows us how far they missed our target by. And right up here, if it's in yellow, then it was pretty darn close. It missed our target, but in this case, it missed it by about 15 cents. So it was a very good week for our bulls last week, as opposed to the previous week where it was pretty much 50-50. If you'd held on to those for an extra week, you probably were rewarded this last week for holding those positions, and you probably did pretty well. So our bulls had a good week. We had a few down ones, which is to be expected because some of these stocks get to running a little bit, start getting a little parabolic, or they may have gone up based on earnings. A couple of interesting positions are the The real estate stocks, we had DH, Horton, uh, and we had LAN here, which are both real estate stocks, and we know that the real estate sector was pretty pedestrian. So we had a couple of standouts in that sector that continue to be in the top 20. So let's now take a look at our bears and see how they did for this last week. Our bears, we had about a 50-50 on the low side. We had a pretty good week in the market. So these bearish stocks, some of them did rise a bit, which is to be expected in a bullish week. Bears are pretty tough to be consistent on because the market wants to go higher and tends to go higher as long as things continue to be favorable for that situation. And our economy is continuing to move along. There are some surprises to the downside, but for the most part, our economy continues to be robust and people are spending money. So that's a good thing. We did have about half of the stocks up for the week and half of them down. We did have several that did hit our target or exceeded it. In this case, CNC went down to $58.37. Our target was $60, about $60.83. So it did okay. This one went right to our target, Cisco, and we had a couple of others that were very good. AEP missed our target by about 23 cents. That's why it's in yellow. That way you can see that it did do pretty well, got darn close, as did Intel Corporation. It got pretty close to our target, missed it by 66 cents. A little too far away to be what I consider a profitable position where I could have closed it for pretty close to the gain I was looking for the week. In this case, I probably would still hold on to Intel Corporation, but it got really, really close, as did Eli Lilly. All right, so let's take a look at this week's bulls and bears. All righty then, we have Apple. Now, last week, Apple did get up to our target and exceeded our target, but you had to be pretty quick on it. In other words, in order for you to have made money on that, you almost had to have been in that on Friday at the close, because Monday morning when it took off, hit our target, went beyond it, and then pretty much for the rest of the week paired its gains, probably in anticipation of the stock split. And there were a couple of them like that. So sometimes you have to be very early on these. I like to get into them on Monday morning rather than Friday afternoon, but sometimes it does pay to get your positions set up Friday right before the close and do the same kind of analysis that I do. All right, so some of the stocks that are really surprising me, but they're in the top, is Alaska Airlines is doing very well, as is Las Vegas Sands, another stock here in Las Vegas, who also has some exposure to some foreign ports where they have their casinos. And Wynn moved up to the top 20, and so did Royal Cruise Lines. So a lot of these stocks that got beat up earlier in the year based on the fact that we had this whole pandemic breakout, a lot of these stocks are starting to come back and show a great deal of strength, but be careful with them, because if the economy does turn sour again, or we go through another lockdown, then those stocks will tend to do poorly very, very quickly. Nike is one that I like a whole lot. I like that because there's a lot of excess money out there, and Christmas is on the horizon, and there's going to be a lot of people spending money on things, consumer discretionary stocks, and Nike might be a really good one to look at. FedEx is also another one to take a longer term look at, because as we get used to this whole idea of working from home and doing a lot of things online rather than going out to the mall to go shopping, FedEx becomes a really good alternative, as does UPS, because those goods and services we're going to have delivered rather than going out and picking them up personally. So those are some good opportunities this week. And I do like Target also as a consumer discretionary type of opportunities. So the airlines, the gambling stocks, and the consumer discretionary stocks are where I'm spending most of my time looking for longer term bullish trades. As you know, MasterCard is also another one. So these are all in the same basic sectors, and I would definitely be looking there. All right, let's take a look at our bears now. Okay, some of the same names are going to be showing up here this week. These are the stocks that I think will do poorly, simply because over the last month they have had some pretty poor performance, and they have, in the most part, had pretty poor performance over the last quarter and for the last half a year. So I have no reason to believe that these won't continue to move lower, and our target price is out here. So if you were looking at AEP, you would want to put your target for the next week to 2 weeks. And again, I do these based on a 1 month lifespan. In other words, the volatility for the next month is how I figure my target price, and I hope to hit that within a week to 2 weeks rather than waiting the whole month. But I give myself 30 days of duration on that trade. So our target on AEP is 76.75, AMAT 61.51, down from $63. So gives you an idea of the range. This tells you the expected move. We have a $3.26 expected move on CCI, down to about 160. So I also have Eli Lilly that I am a bit bearish on. You saw that on our list last week. It's probably headed lower, in my opinion, and down to about 144. Gilead continues to show some weakness, and I currently have a position in Gilead to go lower. So I'm holding on to those. So that's our list of bulls and bears for this week. Take a look at those, see if they can't help you, and then we'll see you next week. All right, good trades.